We also own the biggest private hospitals, 29 hospitals in Malaysia, private hospitals. We've got Johor Land with industrial parks from Tanjung Langsat to Sedenak to Muar. And we have been bringing in investors since way back in 1974. We also own Kulim, as well as Johor Plantations, who basically runs 55,000 acres of palm oil plantations, palm oil plantations in Johor, and we're going for IPO next year. So, okay, good morning, everyone. This is a topic that has been requested for me to present. When I was asked to talk about challenges in sustainable and responsible investment, it is very important to understand that being an investment professional, our responsibility is primarily about return on investment, which is basically measured in terms of money. And whether you like it or not, money is the simplest measure of wealth. And when we talk about investment, we invest in order to generate wealth. And sadly, currently wealth is measured in terms of money. And for a company like Johor Corporation, we have got a total assets of about 29 to 30 billion, depending on how you see it, whether it's consolidated or unconsolidated basis. Our assets is about 29 to 30 billion ringgit. So my job is about looking after portfolio of assets. They are in the form of companies, buildings, lands, financial instruments, as well as infrastructure. So my job is always about making sure that these companies continue to operate profitably and generating the money that we want. So this is where, again, we talk about how do we relate to companies. Companies in the past, we talk about companies exist because the need to give returns to shareholders. And then later on, we talk about companies exist because their job is to create and serve customers. But increasingly today, we talk about companies being treated like they are human beings. They are expected to behave like good citizens, and they're expected to be aware and play a positive role in society. So this is where, again, pressures are now compounded when integrity and ethics are linked to ESG. So suddenly companies are expected to address environmental issues, social issues, economic issues, and at times being pressured not to seek super profit in their businesses at the expense of customers. So on top of that, we're talking about businesses are expected to reinvest in community, preserving the environment, and also replenish the resources that they use. So if I may, this is where we talk about the pressures are coming to the companies, business and business community, where we are expected to spend more and expected to measure returns, not just financially, but also non-financially. And we have to remember that shareholders talks in terms of money. They don't really talk about non-financial, they talk about financial. This way, again, the pressure is very strong on people like us, the investment professionals. Can I go to the next slide now? I think my first slide talks about, when we talk about climate change, we understand climate change is real. Climate change is something that we need to tackle. We do agree that, in order to achieve 1.5 degrees Celsius, which basically means that, there must be a net zero emission by 2030, those are real things. And we do appreciate that, many organizations that serving many stakeholders are beginning to converge in terms of the effort to make sure that this momentum of sustainability effort is going towards the pace that we want. But at the end of the day, we also must appreciate that, how much commitment does the stakeholder actually give? Because what we talk and what we do is actually different. So this way, again, we talk about climate change. Climate change is not just a simple issue. It can range between simple issue to complicated issue and become complex issue. And with the pressure that we have today, it can become chaotic. At the local level, if we talk about floods, it's easy to treat them as simple issue. You just build new sewerage and increase the channel for water flow to flow from one place to another, therefore avoiding floods. But at the end of the day, the question is, where does the flood come from? The flood comes from the rain. And why does the rain keep on happening and there's bigger rainfall? So then suddenly the questions become bigger, it becomes more complex, and it requires many stakeholders to talk about it. And it cannot be tackled simply by just one party. For example, like the flood mitigation. Flood mitigation can be done at the local authority level. But when we talk about, or when we try to answer the question about why does the rain keep on coming and in heavier amount? So that's a bigger question that requires not just at local level, but perhaps at international level, requiring analysis by scientists and action by politicians as well as other stakeholders. But from the perspective of investment, I want to go back to the basic investment principles. Number one, return must always commensurate with risk. So that's the utmost principle of investment. If your required return plus risk is 7%, for example, you need to generate return more than 7% because otherwise you are destroying value. Any return that gives, say, less than 7% is destroying value. Number two, we have to accept that at the end of the day, as of today, the cost of money is getting more and more expensive. Gone are the days where the interest rates are low. Interest rates are increasing and it's getting higher and higher. Therefore, the cost of money is getting more expensive. So for you to invest, you need to give a return that's higher than your cost of money. But what happened? If you look at the bond yields, for example, there's no apparent difference between green bonds or sustainable bonds versus conventional bonds. So from the perspective of lenders and investors, over here we talk about ESG criteria will lead to a lower risk. But at the end of the day, what the investors and lenders are behaving, they're still behaving the same way. They're still expecting returns, irrespective of whether or not it is sustainability linked or not sustainability linked. They may say, sustainability linked will attract lower cost of fund, but in the market it's not. So that's number one. Number two, again, if you look at the interest rate has gone up, the cost of money is getting more and more expensive. So the challenge is, where do we find the balance between trying to address ESG issues as well as trying to give the return required by our lenders and our investors? Compound to that, we also need to remember that at the end of the day, the alternative fossil fuel, for example, there's still many more years to go. And therefore, the assets that we have put in still have yet to recover their original cost. So the tendency to invest in new alternative renewable energy will have some, negative incentive, considering that, a lot of money has yet to be recovered. And we talk about, for example, like solar panels. Solar panel requires a lot of land size. And in Johor, for example, lands are very expensive. And this is where, again, we talk about, the balance between, putting in new money for new renewable assets versus trying to recover the money that we have sunk into the previous investment. So there needs to be a balance between those two. And then, again, we talk about commitment. People say one thing and behave the other thing. So if you look at the progress across all countries in the world, you can see that, there's still a lot of countries that are still, lagging in terms of laws or enforcement that needs to be put in place in order to drive the sustainability effort. So you can look at, a lot of countries, for example, are still at discussion stage, and a lot more at policy document, and very few are actually at the laws enacted level, where what we want is actually, the penalties being imposed on those that do not actually comply with ESG. So as long as there's no law to punish people who don't, penalize people who don't behave in a sustainable manner, it is difficult to push through the effort towards, investing in assets that will help to meet the targets by 2050. And what is worse is that we can see that some countries are moving their targets. We're talking about 2050, but then you can see that some countries, especially China, India, for example, are moving their targets away from 2050. 2060 for China, and I think 2070 for India. So these are major countries, they are big countries. And putting expectation to small countries like Malaysia, while the big countries are not actually, walking the talk, it is very difficult to, achieve an alignment of where we are heading when it comes to sustainability. Again, there are several issues about, how do we measure when it comes to, investing in sustainable assets. How do we measure the progress or the compliance towards ESG behavior? And currently, we're talking about, I've been hearing in this conference the word fair, justice, and inclusive. But at investment level, at the operation level, what does it mean? Because as long as we are seeing some countries are postponing their commitment, or as long as the laws contains a lot of exclusion, exemptions, and flexibility, then the game is not level. There is no level playing field between players. And again, being Johorian as well being Malaysian, we are small countries. If the big countries, for example, is not really committed towards practicing what they say, there is a tendency for us to believe that we are being made the victim in pursuing the agenda that has been forced upon us. Because all we want is that it's a fair and also just, where everybody is committed and aligned towards achieving the same thing. Just to reiterate again, it's not that we don't believe in climate change. We believe in climate change. Malaysia has suffered a lot in terms of flooding. And recently, we're talking about the price of rice has been hiked because of the El Nino effect in Thailand, Laos, and Cambodia, thus affecting the rice supply in this country. And the rice supply is getting more expensive. And it does affect the, the affordability of our people to buy our basic staple food. I think this is what we need to address. We need an economic model that is fair and just to everyone, where we talk about, for those countries, if you want them to keep their forest, we need to find a mechanism to pay them for not doing anything. Because in some parts of the world, they have long demolished their forest for their own development. So for those countries who still have got forests, we should find a mechanism to incentivize them not to develop, and therefore there must be a mechanism to pay for not doing anything. Number two, technologies. Technologies is very key to solve our sustainability issues, but the problem is that, some of these technologies are pretty expensive, they are new, and it is not affordable by the developing nations. So one of the things that we need to address is, the lowering price for technologies to be accessible to developing countries, so that they can together become more compliant and share the aspirations towards net zero carbon. Number three, for lenders and investors, I think we need to walk the talk, where we talk about, there must be a low expectations of how much return we should expect through investment in ESG compliant businesses or ESG compliant investment. And then we talk about, there must be a fairer terms for trade deals. So I would like to end my talk by saying that, I think we need to walk the talk. Talking is good, but we need to also walk the talk. So this is where we talk about, again, investors, lenders must be willing to offer a better terms on their money. Number two, as I was hearing the Singapore panel speaker that day, the role of government is very important. In many Asian countries, Asian countries are primarily driven by government. Government is the one spending money, the public money is the one that's driving the economy. So we expect governments to be more committed, especially in terms of enforcement, and there should be less exclusion, exemptions, and flexibility, so that together we can reach this net zero carbon by 2050. And then the part is, at the end of the day, when we have to invest more for ESG projects, consumers themselves must also walk the talk. They must be able, or they must be willing to pay more, especially in the short term, before you gain back the benefit over the longer term. Because again, ESG is not a short-term investment, it is a long-term investment. The next one, talking about fairer terms to incentivize everyone, where we talk about, as we drive environmental targets, you must take note of the social considerations as well as economic considerations. Because again, throughout the whole world, the world is very diverse. All countries at different level of societal achievement as well as the economic achievement. So again, I do agree that there must be a fair, just, and inclusive approach towards working for sustainability. But at the end of the day, it cannot just be talking, you must also be walking towards it. So that is all I have for today. Thank you. Thank you. There's no question. Thank you very much.